I like people with strong points of view, particularly if they're contrarian, and you've got one when it comes to retail, so tell me all about it.
We are one of the largest, Brookfield's one of the largest owners of retail in America, and it's certainly an area that has captured a lot of public attention lately, given some of the challenges that's happening with retailers and their evolving business models. Oftentimes what gets placed along with that is that all shopping centers are about to disappear and all retail sales will happen exclusively on the internet, and we don't share that view. We think that if you own good quality, well-located retail real estate, those shopping centers will continue to perform well into the future.
You've described retail in America as Brookfield's #1 investment idea. Why?
Well, we're a contrarian investor. At the end of the day, what we're trying to do is acquire very high quality real estate on a deep value basis. And the best way to do that is to buy when others are fearful. And that's really what we see happening today in America is in retail in particular, unlike many other sectors where there's a tremendous amount of capital that's seeking to invest in those types of real estate assets. Retail is one where there's a lot less interest, and so there's more room for us to buy these great shopping centers or other retail assets at good value without a lot of competition.
People might listen to that characterization, #1 investment idea, and say, you're crazy. Amazon is taking over the world. The mall is dead.
They might think that, and oftentimes that's the hard part of being a contrarian investor is your view is different by definition than everyone else's. And so it's not easy to be a contrarian investor when everybody's telling you that you're crazy. But we're very long-term investors. We think about these things in 10, 20-year cycles. As I say, retail is a dynamic environment. It always has been, and the changes that we're seeing happening today are happening more quickly than they have in the past because of the internet and because of consumer changes in their tastes and the way that they shop and the types of things they want to buy. We think ultimately if you have that longer-term view, you're focused on buying great located real estate. It doesn't matter whether we're talking about retail or industrial or office. It's really the same formula.
So help me understand why you're so confident, right? Why you're so confident that retail in whatever form, or that these retail real estate assets are going to prove to be not just valuable, but generate good returns over time too.
Well, I think you have to separate the headlines from what we're actually seeing on the ground. And as I said, we own 125 of the top 400 shopping centers in the United States. And what are we seeing on the ground? Our malls are 96% occupied. The #1 complaint that we get from our customers in the malls is that there's not enough parking. We're measuring traffic, foot traffic through the malls on an annual basis right now, and it's up. It's up year over year through our shopping centers. And we're seeing 3 to 4% rental growth. So all of those fundamentals and what we're seeing on the operating side are telling us that things are not nearly as dire as you're seeing in the headlines today. And we look at where prices and where we think we can acquire assets, investors are taking a much dimmer view of all of those fundamentals than we're really seeing on the ground.
So would you say that retail real estate, to the degree that it is being priced, is oversold?
Correct. Yes, we would.